Do Trump-era tariff wars make Treasury bonds unstable? Not directly, but they can influence bond market conditions. Tariff wars, like the ones initiated under Trump, increase trade tensions, which can slow down global economic growth. Disrupt US-China trade, impacting global supply chains, cause foreign governments to rethink their US dollar exposure. However, US Treasury bonds are still seen as one of the safest investments globally. Even during tariff wars, investors often flock to Treasuries as a safe haven. Treasuries may fluctuate in price, but they remain stable and low risk. Is there a core connection between tariffs and US default risk? No direct connection. Tariffs may hurt trade and the economy, but US default risk comes from failing to raise the debt ceiling, not from trade policy. Even if tariffs reduce tax revenues or worsen deficits, the US can still meet debt obligations as long as the debt ceiling is raised and the government maintains control over monetary policy. So far, the US has never defaulted on its debt. What does it mean when China or Japan dump US treasuries? Dumping treasuries means China or Japan are selling off their US government bonds, which can have ripple effects. As a political tool in response to US policy, for example, tariffs or sanctions, to diversify reserves into gold, euros, or other assets, to stabilize their own currency, selling treasuries to get US dollars to buy their own currency. Bond prices fall and yields rise, higher interest rates, US borrowing costs increase, the US dollar might weaken. But they rarely dump in bulk. It would devalue their own holdings and cause self-inflicted economic pain. Tariffs and trade wars can shake global confidence, but they don't directly threaten US debt repayments. Treasury bonds remain a global safety net, even when politics heat up.